Okay, great. Clay,
John,
as always, an
yeah,
honor to
good
be with you
morning.
this morning.
Yeah, thanks for taking some time and being with me.
I like the backdrop. What are we working with this morning?
This is southern Utah to let everybody know where Galileo's based. So this is actually Antelope Canyon down in southern Utah, right on the border with Arizona.
I like your Zoom game because every time I see you, you've got a different Utah backdrop representing the state proudly.
I try to have something aspirational too, where it's like the darkness going into the light, or a mountain peak, your aspirational kind of notion. So
So
something to go along with the theme.
I love it. So the big news with Galileo in the last month was the acquisition by SoFi. You have built this company largely bootstrapped for over 15 years. True overnight success, and then had the major announcement of this deal with SoFi here recently. How's it been so far working with SoFi?
Really good. They're great. And I've got quite a bit. Hopefully we'll get a chance to talk a little bit about the rationale for the deal and
Yeah.
why we did it, and the position that SoFi is in, and really now that Galileo is in terms of providing just incredible service, I believe, and products to the fintech ecosystem. So it's exciting.
Yeah.
Looking forward to kind of where we are. There's something though, John, that comes before that event,
Yeah.
and that is our relationship to Accel, where I got to know you and all of your partners at Accel, and I can't overstate the importance of having a great capital partner as you go down the journey. It's something that we put off for a long time. We were trying to get to the point where what you mentioned, which was we wanted to be cash flowing and profitable by the time we started that portion of our journey. But really meeting Accel and your experience with picking winners and expertise in scaling API-based businesses and success in our corner of the world in Utah, all of those things came into play as we, and then my relationship to you, just as we got to know each other, we're all really key to our success. And I can talk more about how that kind of played into SoFi as well. But that was certainly an important predecessor.
I appreciate that. And we all feel the same. It's been a real honor of mine and all of Accel's to be working with you, and I hope that we're doing it for a long time. I want to get back at the end to some of the unique aspects of Galileo that you hit on in terms of how you started the company and the profitable approach and all of that. But just to go a little bit more on the SoFi theme, since it's such a recent announcement, it would be great to hear your take on what you got excited about in the partnership, because on face value you have SoFi as sort of consumer business, Galileo as more of a B2B business. And so talk a little bit about what got you excited on the combined vision that you and Anthony Noto have for the two companies.
There's really there's a great example of this in the marketplace, where you've got Amazon, which is this incredible consumer business,
Yep.
and AWS, which is a sort of very different infrastructure business, not at all like the consumer business.
Yep.
And very much B2B. And one of the partners of the infrastructure business is Netflix, which is one of the biggest competitors of Amazon.
Right.
So there's a role model for the SoFi Galileo in the marketplace, a very successful role model. And to me, the rationale makes perfect sense. So to your point, SoFi is this fairly quiet fintech company. They raised a lot of money, and they've really done a great job of building this digital securitization pipeline around great lending products, very diverse.
Yep.
And We, on the other hand, have focused very much on banking and payments and debit, and focused largely to date on North America. And
Yep.
being able to bring these capabilities together, because all of our existing clients very much want those capabilities. So if we could wrap our enterprise grade APIs around those capabilities and then make them available for distribution into out to our clients, we really have an opportunity to create a payments juggernaut. I don't see anything like it anywhere in the marketplace today, and that's
Yeah.
what got me excited.
Yeah, I agree. Talk a little bit about, for those that don't know Galileo, talk a little bit about just where the business sits today. And one of the things that got us excited about it originally was the fact that when you go under the hood at the best neobanks in the world, the vast majority of them, almost all of them, are built on Galileo APIs. And those APIs can be for a number of different things, for sort of the basic ledger to run your bank, for P2P payments, for savings. We heard down the list, really all of the things that you would need to get a bank up and running. But talk a little bit about where you see it today. And then I think what's potentially very interesting about the SoFi partnership is that you can add credit as potentially as another product that can be available to end companies via API. But maybe talk about how you describe the business and then where you see it going. Just Galileo.
Yeah, there was an interesting report that was published about a week ago that showed digital banks in North America. And as I went through the graphic that was associated with that report, it was interesting to note that over 95% of digital banking in the United States today is powered by Galileo. That's an incredible statement.
Yeah.
But
and digital banks as defined as more neobanks. So not necessarily JP Morgan's mobile app, but Chime or, Dave, you go down the list. Yes. How you define it. Yeah.
Yeah. So, I mean, we've got a very extensive, if you look at the, many of the most successful fintech companies that are out there, many of them are challenger or neobanks that you're referencing. Some have a slightly different angle, and Galileo's capabilities will allow them to power or run that capability. But from a TransferWise or Aspiration, Greenlight, you mentioned Chime, of course, as a partner. Robinhood is a partner. Monzo's North American business, Current, SoFi, Scale Factor, Varo, Revolut, Remitly, Coho up in Canada, Shipped, and the list goes on and on. I mean, we've been, you mentioned Dave. Dave is launching right now, 2 million customers in their backlog, exciting product. And Galileo's fortunate to be powering that. MoneyLion is another great example. So there's many examples.
Yeah, really interesting. And the core products that these companies use you for, or use your APIs for, are walk through those.
So creating accounts. So we can become the account of record. On the other hand, we've got capabilities where they may need to be the account of record and maintain certain either balance information, customer information. They may want to have other proprietary logic. Our capabilities allow them to do that, but most importantly, allows them to plug into the payments network, so they can move money, they can make payments, they can access Visa or MasterCard or Discover, any of the ATM networks. We manage the PCI capabilities. We provide capabilities for the back office functions for disputes, chargebacks, all the artificial intelligence for defending against fraud, which is really critical to having a profitable, program or portfolio. All the business intelligence that goes into that, customer service. There's a lot. All the digital capabilities. So all the contact list from mobile, et cetera. So largely these clients are finishing out mobile applications, drawing customers to them on some thesis and then utilizing Galileo to power the access to the payments capabilities through our APIs.
Yeah, yeah. And I think one of the things that's really interesting about the way that you've architected is that you offer those services in a modular way. So if a particular neobank wants to use you to run their card program, you can do that. If someone wants to use you for P2P or for fraud, that's accessible too. But it's sort of set up in a way that the end customer can use you for what they want, and everybody has a little bit different approach to the market, and you've set it up in a way that people can sort of pick and choose what works for them, which I think is a really interesting way to do it.
Yeah, no, it's 100% right. It's all a la carte. The pricing's a la carte, so you can pick and choose. We've got capabilities. I mentioned you might look at a company like Interactive Brokers, which is running an investment platform, and the account of record is actually on their platform. But we have the ability to plug all of that, their customer information, their balance, into our capabilities for the payment network, and alert them and notify them in the event of important interactions. So if you are interested in a customer's authorization, that notice is passed to you. If a direct deposit comes in, same thing. So there's actually hundreds of events that we are interacting with customers on, so that they're getting that information in real time and able to decision around it.
Yeah, yeah. I want to move to talking about what you're seeing in the market post-COVID. So I think of anybody on the planet, you're probably best positioned to have a view on how neobanks and challenger banks are set up in a post-COVID world, because you're powering the vast majority of them. What have you seen? I imagine that there's some push and pull on one end. We've all had to do more digital banking and financial services work. You see the numbers on, how much the stock trading apps are up, and overall digital banking usage. On the other hand, and on uncertain times, people like trusted brands that have been around for a while. So what are you seeing when you look out at your portfolio of customers who are the largest neobanks in the world? How do you think they're set up in a post-COVID environment? More positively, or more negatively?
Yeah, I think it's a little bit of a mixed bag. So there's a few effects that you've referenced that are certainly coming to play here.
Yeah.
The first thing that I would say is I don't have a crystal ball, and so on COVID, the public health thing has got to work itself out.
Yeah.
The effect on people's lives and livelihoods, same thing. It's really a work in progress here, and then the effect on spending, and then therefore the effect on business and businesses and financial markets. All of these are impacted. Of course, we're all seeing that all the way around. What we do have almost instant and perfect clarity on is the choices that consumers are making with their money. So from the instant that it happens, looking backward, I have pretty good clarity on.
Yeah.
And in the digital world that you're referring to here, Galileo and the challenger banks so far have been the benefactors of what's happening. That's not true of payments in general, but it is true of digital banks, largely because there's a real surge in the demand for digital. We've also heard of a flight back to incumbent banks. We haven't seen that. We've seen the opposite. We've seen certain clients that pre-COVID were in the 3,000 to 5,000 accounts a day, and during COVID they're in the 15,000 new accounts per day. And there's quite a few of those examples. I think it also depends on the fintech and the way they're reaching customers and their marketing plan and how active they've been. So there's some of these other factors, but I think there are a number of factors coming to bear. Profitability has absolutely moved to the forefront. I'm
Yeah.
sure if the roles were reversed here and I was asking you the questions, the immediate thing is how profitable or how focused on revenue and earnings is our portfolio company.
Yep.
So that's immediately become an important thing as profitability has been pushed to the forefront.
Yep.
Limited product range is key, and that actually justifies the rationale that I was mentioning a few minutes ago with SoFi.
Yep.
So that's an opportunity, I believe. And then of course just the move to digitization
Yep.
is key.
Yep. Yep. So overall, you are seeing more activity on the for the end customer base than what you were seeing in
Well,
February, early March.
let's say it this way. Galileo had a 95% year-over-year increase in the first quarter. We had a better than that in April, year-over-month increase.
Yeah.
And it looks like we're on track for a really good month in May. And that's largely all driven by the activity that our clients are seeing. Now, we've gone from, in the US, 3 million unemployed, mid-March to 20 million unemployed.
Yeah.
How long and how deep this runs, that's uncertain at this point.
Yeah. Yep. Yep. Well, one of the things that to this digitization point that I thought was interesting about where Galileo sits is that, you and I have tried to ballpark this in different ways, but somewhere in the order of magnitude of sort of 20 to 30% of new accounts that are opened, new bank accounts that are opened in the U.S. Are on Galileo. How do you think over time the larger banks, the more established banks in the U.S. will respond to this? They've all kind of had their own offers and programs, and they try to come up with techie sounding names that are,
I think the
yeah.
first experience is that they've figured out that it's not in the name, and it's more than the name.
Right.
We have seen post-COVID, we've seen really a very strong interest on the part of the larger incumbents, inbound interest to Galileo.
Interesting.
Asking for potentially their help or our help in their strategies.
Yeah.
So that'll be interesting to see it play out. They're recognizing the need to go digital. So we're seeing that. I mean, we've had, I think, 3 of the top 20 global incumbent banks reach out to us in the last, call it 30 to 60 days. So it's really been interesting to watch. I think there is no question that banks are going to have to move, the incumbents are going to have to move in that direction. And I think another factor that is we're already seeing play out is large tech and where that goes from here. So, Google, Apple, Amazon, Facebook, these tech companies that know that they need to offer financial services to kind of retain that aspect of the business.
Yeah. Yeah. Which one of those companies do you feel like is best positioned to be a real viable player in financial services?
Boy, I'd hate to speak negatively about any of them. They're all so capable. But they all have, great opportunities. They've all got loyal, bases of customers, and certainly Apple and Google, Samsung, but Amazon. I mean, Amazon could have an incredible banking business if they chose to do it. Possibly even a Netflix. I've heard the quote many times that everybody's a bank now. And that's really true. And hopefully we'll get to a point here in our discussion. We'll talk a little bit about one of the exciting new products that's coming along, Galileo Instant.
Yeah.
And we'll talk about what that means in terms of everybody's a bank.
Yeah. Well, that's a good time to do it. Let's talk about it. Yeah. Describe the product, and then we can get into some of the use cases.
Yeah, so this is a product where we've tried to eliminate a lot of the friction that occurs.
Yep.
As you try to go to market with a payments capability, it's not easy. You've got to have a fair amount of money. You've got to have banking and payments knowledge, regulatory information and knowledge. You've got to have a bank partner in nearly all countries. So there's a fairly high bar to get over. You've got to have a technology provider like Galileo. You've got to have a manufacturer to get the form factor in their hand. So there's just a number of these partners that you've got to put in place. You need to know something about who's the customer. So KYC requirement. And what we're trying to do is pre-package all of this and eliminate the friction, because what we're seeing is a high demand for businesses that don't want to be a payments business. They don't really even want to be necessarily a Google or an Apple that is entering the payments business. They just simply want to make a payment. There's a classic example. I've got a neighbor that built the stadium, it's a SoFi Stadium. They built the steel, 10,000 welders. And he came to me a few months ago and said, "Hey, I want to pay these welders by the weld every day. Do you have a product that will allow me to do that?" And he doesn't want to be a payments company. He just wants to pay these welders every day. And this is a great example of if Google wanted to pay their YouTube influencers. There's 23 million of them every day. This product is perfect. But there are literally hundreds of examples. So we announced this product in December, and we've been working on it. We finally now are ready for launch. It launches on June 1st. It's already pre-launched right now. There are 450 businesses that have requested access to this program.
Yep.
We've got the first 60 that are already on the beta right now. So
Yeah,
that's exciting.
And the way that it works in that welder example, or you could take any business. It could be a grocery delivery app. You name it. You instantly provision a card. Think of it as almost like you would for a card that's stored in Apple Pay or Google Wallet. And then anyone for the company that's making the payout just immediately shows up in the receiver's account connected to a card. And you could spin up as many of those cards as you want over time. And then then the person that receives the payout on the card can just start spending it anywhere he or she wants to.
Yeah, that's right. So marketplace, e-commerce, gig economy businesses. Really, there's many businesses examples that are out there that might want to take advantage of this type of capability, from large to small. We're excited about the potential here because it eliminates a lot of the friction that's been in the payments business for many years.
Yeah, really interesting. And it touches on a theme that you and I talked about a lot, which is just everything moving to real time payouts and getting money to somewhere faster as opposed to waiting a couple of days for a transfer. The immediacy of it is what I think is really attractive.
Yeah, that's right. We typically in our other solution, which we refer to as Galileo Pro, it can take months to come to market. But it could take us 3 to 4 months. But that's after the negotiation, the contract is settled. You've already got a bank partner. It might take our partner, months beyond that to launch this. So you could be, 9 months to a year to even longer before you've got a product in the market going down traditional routes. And we actually took this product to New York. We were in a large conference room, and we onboarded a fictional business, went through the KYB on it, onboarded an individual within that business, made a payment to them. They went out and made a purchase, in this case, purchase at Amazon, a gift card, so it authorized immediately. And then we utilized that gift card to make a real purchase nearby within the building that we were in. Everything that I just described took 23 minutes. So
Yeah.
not months,
No,
but
that's
minutes.
awesome. And could we imagine a world where with SoFi that you're potentially provisioning some sort of credit to that end user as well?
Absolutely. Yeah. The credit just becomes a part of the mix.
Yeah.
So you could be doing student loan refinance, personal loans or lines of credit, mortgages, small business loans, revolving credit could be a component here. So there's a number of things that could come into play there for sure.
Yeah. Yeah. Really interesting. I wanted to get back to this neobank challenger bank topic, because it's been one of the most actively covered areas within tech and one of the categories where venture folks have invested the most dollars. One of the things that is very unique in the way that the US is set up is that for most of these neobanks, challenger banks, they're not actually licensed as banks. They're the bank actually sits on top of you all, and then an underlying bank, whether it's Bancorp or Sutton Bank, that's the custodian of the end accounts. I was curious to get your take on how you think that dynamic plays out in the U.S. over time. Is that always going to be the way that we do it, or do you think that we'll move more towards some of the markets like Europe, for instance, where it's been a little easier for new challenger banks to get full licenses themselves?
That's a good question, and obviously hotly debated among regulators and other entities in the United States.
Yep.
I think the central bank and other policymakers in some of the countries, certainly the Bank of England, has been very progressive, but others as well. So you see it in Canada, you see it in even in Mexico, and other countries around the world.
Yep. Where it's easier to get a banking license.
Yeah, right. And in the United States, that hasn't been the case. So the OCC might be willing to lead there a little bit, but then you've got other examples, states, other federal regulators that are not quite so eager to jump into that fray. So we'll have to see how it plays out in the United States. I think that we could be benefited by a little bit more progressive, slightly more progressive. We do need to go into it with a bit of caution. I'm actually grateful for the caution that we do have, because the moment that you overreact, you can create problems. So I think you've got to weigh this balance.
Yep. Yep. So over time, you think that we'll move a little bit closer to the UK, and that there might be some more challenger banks that get through and get a license?
Well, we're seeing it with Varo. I mean, Varo's applied for and received a full national bank charter, or they're close to receiving, I should say.
Yep.
Several steps along the way already approved. We could see it with fintechs such as a Stripe or a Square or other large fintechs. So I think we're going to see some more of that that are true digital natives that are approaching banking licensing that way. But in the United States, it's not particularly an easy course or path to make that happen today. But I think we could see, and we are seeing, a little bit of change. We could continue down that path, but I don't know how far down I don't know that we catch some of these other countries that have got full non-banking charter capability.
Yeah, interesting. I wanted to hit on something, just changing gears, that you mentioned at the outset, which is building Galileo in Utah. You took a non-traditional path to build a company that is, if not over it now, is very, very close to over 100 million of ARR and profitable and growing very quickly. And you did it largely bootstrapped, and you did it in Utah. Talk a little bit about how you've seen the Utah tech ecosystem evolve, from the time that you started Galileo to now, and then I'd love to hear how you think about it going forward.
We've got a great tech culture in Utah.
Yeah.
Some of that comes from the tech pioneers. I look at the University of Utah's computer science program, and I don't know if most people in San Francisco or the Bay Area are aware of where some of those tech leaders come from, but many of them come right out of the University of Utah.
Yeah.
And some of the legends. So that has created a great heritage. It's a great program there in Utah. We've got great education and training, and then some of the early pioneers, such as a Novell or WordPerfect, has led to generations of tech capability. And so, what we're seeing now is, kind of second, third generation of tech. And
Yeah.
you've got this whole Silicon Slopes dynamic going on there. It's really fun. It's invigorating. And it's been fun to watch some of the success. Accel has been a big part of that. You've been a big part of that. Your partners as well. So, companies like a Qualtrics, I mean, just an incredible outcome. Accel is the big backer there. I look at what Ryan has done and what he's done for Utah. Just by putting Utah on the map. And really his thesis was, look, we've got great capabilities in Utah, and we don't need to do it in the competitive pressures of the Bay Area.
Yeah.
And that played out really well for him, but it's played out well for Galileo as well. We were taking in some ways the same approach as Ryan was taking, in that, we were trying to go slow. We had specific objectives we were trying to create. We were, to your point, we wanted to be bootstrapped. We wanted to be profitable. And we didn't mind if it took a little while to get there. Now, many tech companies can't afford that luxury, or don't take that time to do that. But it's had a good outcome for Galileo, certainly, and also for Qualtrics, but many others. I look at the other companies that are there, like Podium.
Yeah.
And Accel had a bet that was announced yesterday in Utah. So there's just a lot of great tech there right now.
Yeah. Well, and it seems like one of the other dynamics that is very clear in Utah is just the collaborative spirit that you all founders have in working together and rooting for each other to succeed. Ryan Smith's been a good, person for you to bounce ideas off of. And so that spirit of collaboration is really deep in Utah, where I think you all have you all root for each other's success in ways that are maybe not quite as visible in some other cities outside of the Bay Area. We've been bullish on Utah as a place to build tech companies for a long time, but I think it's only getting better.
Yeah, it's been good. I mean, the number of successes and early successes that are occurring right now, it's invigorating. It's exciting to watch, really. And I don't have I'm not as much in the Bay Area scene, so I don't really have anything other than an indirect comparison to make to it. But we have seen a lot of Bay Area companies move in to Utah. So you get, somebody like a Plaid or many others that have said, hey, we see what's going on in Utah and we want to be a part of it.
Yeah. Yeah. Awesome. What's next for you?
Good question. So obviously making sure the integration works is key.
Yeah.
And I'm not going anywhere. I'll stay on as the CEO of Galileo. And so what's next for me is what's on the agenda for Galileo. And we've had early success in Latin America. We've had a big push in Latin America. We've signed 5 of the top 20. I think we'll sign many, many more before it's over.
Awesome.
We're announcing informally, we're exploring areas in APAC region right now. We recently acquired a broker over there, and so supporting that will be key. But we've got some very large inbound interest from other points in APAC, so that will also be a focus of what we're doing. So we've got plenty to keep us busy in the integration, pulling off the strategy that I was talking about earlier with credit, and Latin America. It's all exciting right now, really exciting.
Yeah, awesome. Well, and hopefully I can convince you to make some co-investments alongside Accel here going forward, and maybe
I'd love
join a
to.
board or two.
Well, I can't say enough about Accel, the way you guys approach the business, your partnerships, the dynamic engagement. I've seen it over and over and over again, and really anyone just needs to go to accel.com and pull up the, click on the success button, and you'll see a long string of it. And you guys definitely have a formula, and it's an absolute pleasure to work with you guys.
Well, it's all from entrepreneurs doing the work, all the work like you have. So it's been an honor to work with you, and I hope that we'll have a lot of projects to work on together going forward. And we're rooting for all the success to you and Anthony and team as you start collaborating and bring the businesses a little closer together. I think that Amazon AWS analogy is a really interesting one, and you're doing it at real scale. I mean, got $1 billion of revenue in sight in a pretty short amount of time, which I think stacks up against the rest of the fintech ecosystem globally pretty impressively. And
Right.
And I think some of those combined products like instant issuing with credit are going to be real game changers in the industry. So we're really excited to see where everything goes, and very grateful to you for having us along for a bit of the journey, and excited to do more things together.
Well, thank you. And if we've got just one more time, let me reverse roles here.
I
What do you see?
I thought I was just asking questions.
What do you see from an investment perspective in the current environment? What's your view of things?
Well, we've been spending the vast majority of the time working with portfolio, because everybody's been impacted in one way or another. We have certain companies that have that happen to be in areas like a Slack or CrowdStrike, where as more people are working from home or working remotely, they really stand to benefit. And then we have companies that have been, impacted to the negative, of course, too. So we're spending a lot of time with portfolio companies. But I think to your point around digital banking, if we look at it more from the lens of new investment activity and what's next, there are a number of categories that are still more offline than online, where I think that the COVID just accelerates the shift to more digital solutions. So you mentioned Remitly and TransferWise's customer. That market, the remittance market, has up until this point been about 80-20 offline online. So offline meaning you or I go to a Western Union store and send money to a bodega in Kenya, and someone goes and picks it up. You can't do either side of that transaction offline right now. And so that has moved that remittance market, one of the largest markets in fintech, very, very quickly to mobile and digital only solutions. And so companies like WorldRemit, which we're in London, or Remitly in the US, Galileo customer, are really accelerating. And so, as we see those kinds of opportunities, particularly businesses that we've worked with for a while, like WorldRemit, we'll likely want to do more over time, because this just accelerates a shift that was going to happen no matter what, just makes it a lot faster. So, we're paying attention to those kinds of shifts, a lot of that happening within financial services, and we're continuing to make investments. We're just taking a little bit more time on each new one, and always have a high bar, but are really trying to focus on or blue chip businesses that we think have good long-term tailwinds behind them.
If there's an aspiring entrepreneur listening to us today, what's your one piece of advice to them in the current environment?
Well, I think a big thing is get your unit economics working. This is a good time to do it. yeah, 2020 for a lot of companies is going to be is you're going to be able to put an asterisk on 2020, and so for a number of companies that we have or that are out there that are unprofitable or burning a fair bit of capital, I think this is the time to right size and get the unit economics working as you had from the beginning, and then you can be as aggressive as you want to over time. That gives you the luxury to do it. So I think get the unit economics right, and get through this period, and then there'll be plenty of time to be aggressive down the road.
Awesome. John, thanks for having me today. I really appreciate it. I appreciate you
Hey,
doing this.
thank you. Always good to see you.